What's up, everybody? It's Omar from the Bullish Bears team. Wanted to make a quick video talking about a play that I called and why I called it, and kind of just talk about strategy for a little bit. For those of you who don't know me, again, you can find me on on Twitter. My handle is watchotrade. I really appreciate it if you followed me. Also, if you go to YouTube, let me come back here. Let's go to YouTube. Again, you can just on YouTube. I'm otherwise known as watchotrade as well. Okay, so this is me. I gotta get this up, man. I only got 215 subscribers. I should have way more than that. All right, but I'm also part of the Bullish Bears team, so that's where you kind of find people know me from. So if you type Bullish Bears, all right, this is the actual community that I run with these guys. My boys Lucian, Tim, and Dan. And here they got about 2,800 subscribers. That's where I should be personally. That's where I'm hoping to be. But here, the Bullish Bears team, obviously they're great. We have a ton of videos on day trading, shorting. This is my course, all right? So when you go to bullishbears.com, when you're at bullishbears.com, you could come here to courses and you click on momentum trading course. It's my day trading course. So what they did was they took these YouTube videos basically and they linked them into a course. So it makes it easy for you to kind of structure and kind of, get a sense of how I trade and all these things. So there are about 10 videos. Plus I came up with this swing trade scanner setup for swing trading as well. But what's great is that, it gives you like a sequence, a structure to follow. All right. With that said, I want to talk about something that happened today. So today, so this is what happened. Before the market opened, I was trying to log in at work to, hopefully see if I can make a trade. And, I couldn't get in. So somebody asked me what was the trade you wanted to make? And, I said not sure because it's true. Like, you don't know. You got to let the market open to get a sense of, what's going to happen, right? So I said not sure. I usually wait for a few minutes after the market opens before I make a trade. Fold had a nice gap up. We'll look to short it. And it should have a pullback. Now, let's talk about that. Let's talk about why I knew or why I was biased towards fold. Now, there was others as well. But look what happened. All right, I'm not Nostradamus, but the market opened and the stock immediately sold off. It opened up at 842, and by 957 it was at 813. All right, using my short selling strategy, all right, the stock went from green to red, all right, and if I was looking to short this, I would have waited for that lower high to form. So right here at that 838 level, this is where I would have took my short position, risking the high of day, which was 842. All right, and you could have got short, and you could have took this all the way down. You see, it just kept going down. You had this indecision doji. You got a little bit of volume, but it didn't do shit. It bounced for a second and it formed this lower high right here, and then it came down, and then it came back up right here, formed this lower high here at 822 again, and it went above it, and it's continued to go down. So you could have shorted it again right here, all right, when it came down here at 821, and just continued to watch. And then you got this dip buy opportunity. So when stocks completely gap down, okay, they find their support level at some point, and then you're going to see a volume push. And this is how I would have known to get in, because you look at the volume bar, all right? So you see the volume changing. You see that this is now its new support, 813, and look, you get this little dip. Now, you don't know how high it's going to go, but, you get a piece of that move, and once you see the reversal, you get out. And then you could have took this short again if you wanted to. But, all right, but let's get back to my thesis. Why would have I looked to short this? It's very, very simple. If you watch my videos in the past, Okay, watch my videos in the past. Let's look at this 5-day, 5-minute chart. All right, it's right here. Actually, I'll put it up here so you can see. Why? Because yesterday this stock went from 762 all the way to 850. So the stock, okay, was overextended. So my thesis was, because it gapped up so much, people are going to take profit. That's my thesis. That's why I knew. That's why people love short selling, and that's why short selling is a lot easier than longing, because you can get a better sense of what a stock is going to do based on the fact that it's overextended. Okay, let's look at a couple of other. This was my watch list, all right, for yesterday. Now let's look at a couple of other stocks, just out of curiosity. Look at Cool. Cool was at $11, okay, on the 17th. Yesterday, this stock went from $13. Let's look at it. $13 all the way to 17. It closed at 1703. Now I just picked fold randomly because somebody asked, and I just remembered to just look really quickly. I didn't really look at every stock, but you could have took a whole bunch of them. Look what happened up with Cool today. Because the stock was overextended, the market opened, right? It gaps up for a second in that 1 minute candle. It goes from, actually it's a 5-minute candle. Let me put the 2-day 1 minute. Sorry about that, guys. So what happens? The market opens and it gaps up to 739, all right? And and then look, it forms this lower high. Now at this point, let's see pre-market. Was there any activity? There was no activity pre-market. So me personally, had I seen this, knowing that the chart was overextended, I would have put my little trend line here to say it's high day, and once it formed this lower high, right here at 1731, I'm taking it short. And look at this bad boy. Look how much it collapsed. Came back up, it bounced, and then right here formed a lower high. Okay, because it gapped down, it comes back up. Actually, this candle right here. I'm sorry, this is the next minute. This line represents the previous day's close price. So it goes from red to green for a second, and then it just collapsed. And right here, look at the bear. This is a bear flag because it took it down short. All right. But the point that I'm trying to make is, if you want a simple strategy, you look for charts that are overextended, like the ones on my watch list. Doesn't mean they're not going to continue up. Doesn't mean that they're going to just, pull back it all day. But look, this thing collapsed all day. Now, you could have held all day and made a killing. But when stocks are overextended like this, you're going to get a pullback. Doesn't mean that you're not going to get a continuation up, but you're definitely going to get a pullback. Let's look at a couple others. Hertz. Look at Hertz. All right? Let's clear this joint set. All right? Hertz, okay? If we look at the 2-day chart, all right? The reason why this was on my watch list, it was at, let's look at the 5-day, 5-minute, actually. This stock was at 924 on the 19th, and it gapped up all the way to about 1050. Okay? So, and you looked at it when the market opened today, look what happened. It sold off. Why? And that has nothing to do with fundamentals. It's that people are going to take profit along the way, whether a stock company is good or bad. But the market opened, and look, it went from green to red right here. Selling pressure. Right here, I would have took it short. So, let's say the market opens, it comes down, this next minute candle goes up. Yeah, you see this dip and it goes up, but it doesn't go up. You see that you don't have, now there's not a lot of volume here. But the point that I'm making is, look what happened. It completely collapses. All right, it collapses. It had 4 million shares traded, so it was shortable. But this is why I love short selling. This is why I'm trying to get you guys to understand, for those of you that watch my videos, that any retail trader who's successful, I'm telling you now, they're not a long. They don't just long stocks. They're short sellers. They're short sellers, because shorting is a much simpler strategy. It's much simpler, and it's a lot less stress than than longing. That's why people short sell. Let me clear for a sec. Yep, and then a couple of other stocks. All right, look at Car. Look what Car did. Why? Look, let's look at the 5-minute, 5-day chart. Right, it was 2140 on the 19th. This thing went all the way up to 2422. So what happened when the market opened today? All right, it pulled back. It pulled back. Why did it pull back? Because it was super overextended. Once it goes from green to red, meaning it dips below the previous day's close price, that's a sign for traders to get in short. And where I would have gotten short was right here on this bounce. So if this is if this is at its highest point and you see it collapsing down, right here actually is the first lower high. I would have gotten held, and you see it didn't even break above it and just held strong. Look at this. Formed another. All of these are lower highs along the way where you could have shorted. You know, and then here you go, another lower high. These are all entry points for you to take this bad boy down. And at some point when the stock collapses, you're gonna get a bounce. And I love to play bounces. So if I would have saw a stock like this form a double bottom right here, which is a sign that the stock is gonna reverse and trend. And look, the gap up, you get that pullback. That's a bull flag. So this is your entry. Another gap up, pullback, bull flag. Why do you think it's getting so much volume here? Because people know, they see the bull flag sign. And they know that this is the candle where you enter. Another gap up, pull back, and then you get a little reverse. And then look, it kind of washes back down. All right? And then it rips again. All right? That doesn't mean that tomorrow these stocks, and look, it just continues to suck. Doesn't mean that these stocks tomorrow won't go back up. Maybe tomorrow they'll come back up. But that's what I wanted to talk to you guys about in terms of short selling and looking for overextended charts that you could potentially take down, all right? Like DDD always goes up and down. Look what happened. DDD, all right? We look at the 5-day, 5-minute chart, okay? Look what happened yesterday. This thing gapped up. It went from 21, it was a low at 21.49, and it closed at 22.47. So what happens? The market opens, it kind of finds its way. It had this crazy 5-minute run. Let me put the 1-minute chart to show you. So, it had this crazy spike, in this 1-minute time frame. But look, when you see that sideways consolidation like this, you know you're going to get a pullback. And look at this. It had this sideways consolidation. And right here, this lower high. So, me personally, had I seen it go like this, and in the next candle, it forms this lower high here, I'm taking a short entry, risking high day. And I would have took this bad boy down. So you could have got in here and thrown it down. This lower high right here at 26.62, you could have got short here. You could have got, look at another lower high right here. You could have took it short there. And look, it collapses. What does it do? It finds its, remember, when a stock has a bunch of red candles like this, it sells off, you're going to get a bounce. You don't know how big the bounce is going to be, but you're going to get a bounce. This thing went from 22.15 to 24, high of 24.42, before it came down. And then look. Then it got another bounce, and then this thing went back up to the moon again, all right? So, and then it came back down, and it found support here. So it's all over the place. But my point is that that's why I love shorting, because to me it's a lot simpler. It's a lot easier, all right? Now, I want to keep this video short, but I will talk about a couple of other plays. ETRM, ripped at the open. It went from 6 to 6.45 and then completely sold off. But the big winner, and I got a couple of questions about this stock today, was, where is it? And it was on my watch list too. Where is it? GLYC. Okay, people ask me, well, Omar, let's look at the, I'll put up the 1-year chart. Right, the stock was crazy overextended, right? And I said, when you get that first red day, you get a big collapse. And you did. This stock went from $12.90 all the way and closed at $11.01, right? Almost $2 a share. And then it ripped again, right? So, it ripped again. And people ask me, well, why did it rip again? All right? It ripped again because what happened was this stock fell on what's called the short sell restricted list. When a stock goes on the short sell restricted list, that means you can only short the stock when it's going up in price. So when a stock like this rips like this, short sellers don't know when a good entry point is on the way up to short it. It's hard. It's kind of hard to do, so they kind of stay away from it. There was also an offering, and because of those two things, that's why this stock went crazy again today. Especially once it went from red to green. So you see how it's below, right? The market opens and actually it had some good short entries when the market opened. So it starts dipping, lower high right here. This could have been your first entry short at 1090. Then it pulls down to 1066. I mean, you could be covering here, but look, it forms another lower high, and it gap down. It forms another lower high. All right, but what happens is once it goes under the short sell restricted list, what you're gonna do is if you're gonna take a short, this is another strategy. All right, once it starts gapping up, the closer it gets to that lower high, that's where you want to get your short entry. So as it's gapping up as close to that 1090 as possible, because now you're shorting as the stock price is going up, so you gotta be scared, you gotta be fearful, but you want to get into as close as the previous lower high as possible. So if you're on that short sell restricted list, right? Let's say you missed this entry and you're watching it, right? The next lower high is at 1066. If I watch this and I see this go up here, this is going to be this is where I would enter my short position, risking 1076. If it goes against me, I'm out, I'm covering. All right, that's the only way you could do this. Now what happens is it keeps going down that pattern, which is great, and short sellers may, if they're smart enough and they understand these things, they do. But then it kind of forms this U-shaped pattern where you see it starts forming these bull flags, and we know, okay, with bull flags, all right, you're gonna get pushes. So look at this: gap up, pull back, volume comes in, gap up, pull back. These are flag patterns, right? People get it, and then it went from red to green, so that really caught everybody's eye. All right, and then what made it move even more? What made it move even more was at this point, right? Once it goes from red to green, this is high of day, because this was the high of day pre-market, right? So let me put my price line. This is the high of day pre-market, right? 1150. As soon as it breaks 1150, it pops up on everybody's high of day scanners. So now everybody is hip to this, okay? Stock gaps up. Stock gaps up. And then, give me 1 second, guys. Sorry about that. All right, so then it gaps up, okay, and it breaks above the high day people scanners right in here. All right, so now people are aware. So what happens? It drives. So in the next candle, look at the volume. That's why the volume came. That's why the volume came in. The volume came in because people saw it appear on the high day scanners. It's a low float runner, okay, and then people are buying it because of that. So it pulls up, and then look, it washes, and honestly, low float run like this, it's scary to trade because it's so volatile and the price action is so crazy that you're not sure what it's gonna do, you know. So, you know, me personally, you know, I might have taken a play here once it bounced off VWAP, using VWAP as my risk level, you know, and I might have taken a trade here and watched it go up. I mean, that would have been a comfortable entry for me, but through all this, I'm not touching it because I don't know what the stock is gonna do. It's so volatile. It's going up and down. There's really no clear pattern for me to trade. So the only trade that I would have taken was that VWAP bounce, risking VWAP. So this is my VWAP indicator, and you know, and then you had another opportunity. Look, it bounced off VWAP again. That's not an accident, guys. It's just that nobody knows what the fuck the stock is gonna do because it's so volatile, and and institutional traders. So guys at Morgan Stanley and Goldman Sachs, they use VWAP when they trade stocks too, and you know, and that's what's happening. The stock bounces off VWAP, and people take a trade based off it because nobody knows what the stock's gonna do. Now, I would have taken another entry once it bounced off VWAP, risking VWAP. All right, now. The other trade, the other opportunities where I would have taken this is that this is high day at this point, right? So let me go back. Let's put a trend line here. 1222. All right. Now this is high day at this point. Okay. All right. And you can see that the stock. Let me get out of this. Sorry about this, guys. This whole drawing tools change is driving me nuts. But at this point, 1222 is high of day, right? And you can, if you notice, it's, you know, it's forming higher lows. All right. So if you see that it's forming higher lows. This is the high of day. You put your trend line. You see that it's forming the higher lows. So more than likely, you're gonna get a squeeze. What happens is people saw the value coming in because they saw the wedge pattern forming. You see how it's forming a wedge pattern, and people got in because of that. But what really made it go up was that once it broke 1222, it got on everybody's higher day scanners again. and people knew. So look, and it forms this flag pattern, gaps up. See the sideways consolidation? That's that flat top breakout right here. Okay, and then it gaps up, pulls back. You get this flag pattern again. So you see, you get another flag. So what happens? People on the pullback, when it hits the 9 and 20 EMA, you get another push up. That's how people look. Another flag pattern, pulls back, bounces off the 9 EMA, another push up, and then it comes back. This is the 20 EMA hits, and then it just forms this. It's just going crazy. Like, it's just very hard at this point to keep going. Like, you don't keep expecting it to go up, but the reason why it keeps going up is because short sellers are getting squeezed. What they're doing is they're saying, okay, they're looking to see a good entry point to short it. They're probably thinking, all right, well, it's up at 1256, it's coming down, I'm going to short it at 1250 because it's a psychological resistance barrier and it'll probably come back down. So people are shorting this, not really short, because to me, as a short seller, I don't really know a clear entry because it keeps forming higher lows. So there's really, but they're trying to short it, thinking that it's going to run. People are crazy. And then if you notice, looking at this, you see the head and you got that double top here, which is sort of like so it's almost like a double top, but this when you get these like tops, that's a bearish. So that means that the reverse is going to happen. Look, and then you get what I call the late day wash, where people are taking profit. So what do I think is going to happen tomorrow? Who knows? But for me, what I showed, those are the only areas where I would have taken a trade on the stock, because I wouldn't have known what the stock was going to do. I would have been too scared to get in because the stock was too volatile. And other plays, don't fall into the FOMO, fear of missing out, because you don't want to make bad trades. There were plenty of other trades available here. All right, guys. So I'm not gonna build my watch list in this video. I didn't want to keep it too long. I will send it out again. Please, guys. Again, remind you to watchotrade is my handle. Please subscribe. All right. I'll pretty this up somehow. and then remember, follow me on Twitter. All right. watchotrade. All right. I post my watch list there every day. Well, let's go to me. Yeah, you see. All right. I'm going to get some momentum, which is nice. All right, guys. So hope you found this helpful. Hit me up. Ask me questions on Twitter, Facebook. All right. Remember, I belong to Bullish Bears. This is the Bullish Bears community. All right, just so you know, this is a send a request and we'll add you on. All right, folks? So hope you have a great one.